Welcome to the Loner Ranger Radio Show. My name is Bruce Woodburn. I'm the Loner Ranger, Cross Country Mortgage. Been in this mortgage business game now for 32 years. And I'll tell you something, going strong. The market's still hot and heavy. We're having fun out there, helping lots of people, get into homes. A lot of first-time home buyers, move-up buyers, people that are buying vacation homes, cashing out money to renovate your home. We talk about all that on this show on the Loner Ranger. If you have questions for me, all you got to do is pick up the phone. You can call me. My direct phone number is 407-706-3313. That's 407-706-3313. Or you can visit my website at webringyouhome.com. That's webringyouhome.com. So on this show, we cover it all. What's going on with interest rates right now? That's always a hot topic. And alongside me is my dear friend and co-host of the Loveland Report and Loner Ranger Radio Show on Saturdays, my friend Cleve Loveland. Cleve, welcome to my show.
How you doing, Bruce? Thanks for having me on.
You're very welcome. Very welcome. It's going to be good to talk to you today. I want to get some updates as we go through the show, but we want to talk first a little bit about what's going on with interest rates right now. Are they holding steady? Are they starting to creep up a little bit? You know what? I got to tell you, it's like a magic show out there when it comes to interest rates. So 2.5 weeks ago, we lost in about a 2-week span, we lost 200 basis points on the market, which equates to about 2 points that it cost a client to get into a loan from what it was previously. And then this week, it's settled back down about 50 basis points. So we've recouped about 50 basis points on that. The market has been mostly strong this week. There were, meaning that when we see the stock market is doing really well, that's usually not good for mortgage rates.
Actually, last month was a good month in the stock market. So.
Yeah, so it was a good month. So we lost ground. And when you see your stocks are doing well, your 401k is doing well, you're all excited about that. But if you're ready to buy a house, it can definitely affect interest rates.
Interest rates, yeah.
It's so funny. I've seen people over the years, they're like, I'd really like my 401k to not do so well while I'm in the home shopping. But as soon as I close, I want it to do really well. Yeah. Right? So that no one else gets the benefit of that.
They're still really good. We're still low threes, right?
They're still low threes. Look at 15 years still in the twos, 30 year in the low threes. You could buy it down into the high twos. We've got so many really attractive programs, and the refinances, surprisingly enough, have not stopped. Yeah. They're still coming in, and I had some data, Cleve, that it was telling me that 80% of people that should refinance have not refinanced yet.
That's wild.
It's crazy, right? Yeah. I mean, because we know that we saw the best interest rates back in January. They're still attractive, but...
And this is people, people... Like I sent you somebody last week that had a rate. I was talking to him, and unfortunately it's a divorce.
Right.
And the rate was okay, but he's
got to get out.
I said, don't sell the home. Refi it. There's a lot of equity. Refi it. Pull the cash out. Keep the home.
Yes.
And then so you're going to help them refinance. But I run across people every once in a while. I'll see them there if they're north of 4.5, 5.
If you're north of 4.5, you must pick up the phone right now. Give me a call at 407-706-3313.
Or if they got a bunch of bills they want to pay off.
So you know what? This is what I'm actually seeing the most of. Is since we have experienced a lot of appreciation in our home, then you have a lot of built-in equity, and it's time to cash in some of that. Now, what I also saw people doing during COVID is they were spending a little bit of money. They were out there, them credit cards got jacked
Amazon
up,
trucks at the house every day. Yeah.
I'm telling Amazon trucks at the house every day. You're parked at Home Depot parking lot on the weekends. I mean, you're at Bed Bath & Beyond one day. So the consumer spending kind of went a little haywire, right?
Yep.
So now you've accumulated all this debt, but you're sitting on some equity. Mm-hmm. Well, all the credit card debt, if you sit down right now and you add up your credit card debt, maybe your car loans, your boat loan, your Harley loan, your Boston Whaler, I don't know what else you have on there, but your Best Buy, add it all up. See what that number looks like. If you're coming up with 500, 600, 800, 1,200, and that's not uncommon for me to see that, I can pull money out of the equity of your home, pay that off, and reduce your expenses. But here's what I'm doing that's really blowing people away. And this is what gets me excited, Cleve. Let's just say your current payment's $1,500 and you're paying $1,000 in consumer debt. So you're paying $2,500, right?
That's your bills for the month.
So I refinance your home, pay off all your credit card debt, and let's just say your mortgage payment goes from $1,500 to $1,700. It went up $200. You got a net gain of $800, right?
Yep.
You're ahead of the game by $800 a month. You now apply that $800 to your mortgage, and you take that 30-year mortgage and you're paid off in 10, 15 years. Now you have no consumer debt and no mortgage in 10 to 15 years.
That's the great thing about that. Is it time to refi? They just need to call you. And sometimes you'll tell them no, but if there's a benefit like that, most other loan reps, the teller at the bank is not going to tell people that.
Oh, and your big lenders that you hear on the radio all day long, they will convince people. And I'm going to tell you, they got to be better salespeople than me.
Yeah.
Because I'm getting calls from you guys that are going like, yeah, I went to the spaceship guys, and they told me that they could get me this rate. And I look at it and I went, well, that's a really attractive rate. And I look at, well, of course they're charging you 2 points to get it.
Yeah.
That's not worth it.
Yeah.
Don't do that. Let's examine it and determine what is truly going to be the best situation for you. And you know, it's funny because I see some of those companies, they like to quote a low rate, but their closing costs are through the roof.
And then also another thing for refinancing, get rid of PMI, right?
Getting rid of PMI is another great reason to do that. So if you currently have an FHA loan and you've got built-in equity and your credit score has gone up, like FHA is a great loan. If you don't have a lot of money to put down, if your debt ratios may be a little higher than conventional allows, or your credit scores aren't quite there. Yep. But now you bought a home a year ago, 2 years ago, you've got built-in equity. Now it's time to get rid of the PMI, or the MIP it's called on FHA, because it never goes away.
On
it
FHA,
does not go away.
Yep.
And a lot of folks think that if they got a conventional loan and they have PMI, that once they hit 20% in equity, it just disappears.
Nope.
Does not go away.
Nope. It's like the 20th year, maybe, I think
So
it fades,
so
right?
here's the guidelines, and a lot of people don't know this. They'll go, oh, I'm almost to that 20% rule because, you know, my house has gone up in value. First of all, the rule is that you have to be at 78% of the original purchase price. The original, not today's value.
Oh, wow. Okay.
And a lot of people don't understand that.
Yep.
Now, it is a mortgage company's discretion to remove it, but if they have insurance on it, why are they going to want to do that?
Yeah.
And in some cases they might. If you have questions and you want me or my team to examine your loan, you can call me on my cell phone, 407-706-3313. That's 407-706-3313. Or go to my website at webringyouhome.com. Cleve, let's talk about buyers in the market right now, because you and your team are helping a lot of my clients purchase homes.
Yep.
We got some investment homes you and I are doing right now. We have some home buyers that are in our Leapfrog program right now that are buying second and third homes, our first homes. So that's happening. What are you seeing with the market? Because, you know, you and I were seeing that if you were getting into the market, you were getting frustrated because you were up against 15 other offers.
Yeah. What's happened from the beginning of the year, inventory's been hovering. Inventory hit its bottom about 6 months ago of only about 2,800 homes for sale. So what that means is I put my houses on the market for like 5 days. I start on like Thursday, close bidding on Monday at noon, and I would have anywhere from 10 to 30 offers depending on the price range and the location and how well it showed.
Crazy.
And it was a bit, and I structured the process. I learned this in 2005. I've been doing this for 30 years, but that was the one time I kind of took this system back on and got the best offers for my clients, my sellers. And as a buyer, though, now you've got a little more wiggle room. Now, most of those offers, Bruce, even though there's 30 offers, nobody was going 10% above list price.
Right.
Most of the offers are 2, 3, 4% above list price, maybe. We'll waive the appraisal. We'll do 10,000 over appraisal.
Right. But limit what you're going to pay over.
They do. And that's where, and so it wasn't craziness there. And buyers are very educated now. On their smartphone, they can pull up all the last 5 sales.
Isn't it the truth?
And they know the last couple look better than the one they're looking at. And they're cautious, which is good. So, or their parents got burned in the bubble, or they did. But what I was seeing the past 6 months, inventory's like leveled off around 3,600 homes for sale, and that's about just under a month's supply.
Which is still low.
It's very low. And so now I get 2, 4, 5 offers maybe on a house. A hot one, I had a hot one below 400,000 in a great neighborhood last week. I got 10 on it.
Right.
So, but it's still, I think we're going to be in this kind of chop. Let's say,
it's not going to get better anytime soon.
I think it's a choppy market. And I think inventory next year, we're going into 2022. I think it'll probably push into the 4s slowly, and then it will slow down. And you think interest rates are going to rise next year a little bit?
I do think they're going to probably go up next year. But you know what? Here's the thing. I don't think we're going to see a skyrocket in interest rates in the next 24 months.
Or inventory. Yeah.
I think, or inventory. Now, it was ironic because I saw this news the other day that said the housing market is correcting. Houses went down by $2,000 last month, right? So they went from an average of 320 to an average of 318.
70% of all stats are made up, right?
I think 90%.
Think about that. Think about that. But it's, that could have been that there was a couple $5 million homes sold that month they did before, and they didn't sell this month. So,
right.
But that's what you and I do is you interpret people's personal needs for their mortgage. I interpret their personal needs for whatever house they're selling or buying because everybody's market is different.
For sure.
A buyer sometimes might want the nice big custom home, but good Lord, he grew up, mowing 5 acres with a push mower, and that's all he has nightmares about. He wants a little yard,
right.
Or somebody wants some space because they're tired of the HOA telling them what color their curtain should be, and they've got ATVs and they've got bass boats and they got company trucks. Whatever that person's, it's personal to every person out there. That's why you can't just look at a website and figure out how to do something or what you need to sell your home for.
Right.
I need to walk through it and help guide you on that. And getting a mortgage, they can't just click a button.
No.
And you need to tell them.
They say that on these commercials, push button, get mortgage, right?
Yep.
So it's more than that. And I can tell you that is not the truth for any lender because we all have the same guidelines, but you want to make it as easy as possible for the client. It's really interesting that you're talking about the existing home sales being at, what'd you say, 3,600 homes? And that's a 1 month supply, right? We need a 6 months just to be a balanced market.
Well, and Central Florida hasn't had a balanced market. And let's say it's skewed way bad in 2008, 9, and
right.
10. And literally in 11, it went back to prices climbing.
Yeah.
So on inventory. What happens was sales slowed because everybody bought too many homes.
Sure.
So like the sales dropped and the inventory jumped. So it was a bad storm.
And builders were greedy. So it's interesting because I saw some statistics on builders because right now we need builders to help the market. And the builders are not included in that 3,600. So I saw some statistics that new construction went up 100,000 units between August and September of last month.
Well, I heard, the builders were overbuilding up until 06 and 07, and then it all fell apart. And ever since then, since they recovered, they went out of business. Most of them went out of business and restructured over those couple of years. And ever since 2010, and I saw a talking head on one of the financial channels talking about this. It made perfect sense. Ever since then, they've only been building what they need for right then.
Right.
They're looking out maybe a year, and they might be accumulating some land, but they're not overbuilding. Like you used to go into a neighborhood and, we've got 7 completed.
Right.
And I haven't seen that in 12 years.
They won't. Their inventory doesn't last that long.
And now we got supply chain issues. Which drove the
we have
prices
supply
up.
chain issues. So, and when we come back from the next break, I want to talk a little bit about some builders and some builders that I really like that are offering some amazing products, great service, great price, and all over Central Florida. But it's interesting when I see clients right now that go to these builders, the builder will force the client essentially into using their own mortgage company. Now, they don't say that because that's steering and that's illegal. But they say, if you don't use our mortgage company, we won't pay $5,000, $8,000, $10,000. You have to use their mortgage company.
Yeah.
But then their mortgage company, whenever you guarantee business for somebody, the service level goes to hell in a handbasket. And I want to talk a little bit about that because you know me and Saladgate, I am all about service. I want service. So we'll be back in 5 minutes. We're going to talk a little bit more about what builders are offering and what you should look out for in this market. 407-706-3313 or Cleve Loveland can be reached at 407 407
352
352 8118. Sorry, I don't know why I lost your
That's all
number
right.
there. Be back in 5.